Hello viewers, welcome to the YouTube channel Roshni with Hina. Today I will discuss the topic money and banking. Money and banking are fundamental pillars of a modern economy, facilitating transactions, promoting financial stability, and enabling economic growth. Money as a medium of exchange acts as a common denominator for valuing goods and services, simplifying transactions and eliminating the need for barter. Banking institutions, on the other hand, play a crucial role in the creation, allocation, and regulation of money supply. Function of money. Money serves several essential functions in the economy. Medium of exchange. Money eliminates the inefficiencies of barter by providing a standardized unit of value that facilitates transactions. Unit of account. Money serves as a common measures of value, allowing for comparison and pricing of goods and services. Store of value. Money retains its value over time, enabling individuals and businesses to save and defer spending until needed. Standard of deferred payment. Money allows for contracts and agreements to be specified in terms of monetary values, facilitating transactions over time. The role of banking institutions. Banking institutions play a pivotal role in the financial system. Money creation. Banks create money through fractional reserves banking, where they lend out a portions of deposits, expanding the money supply. Financial intermediation. Banks act as intermediaries between depositors and borrowers, channeling funds from savers to borrowers who can utilize them for investment and growth. Payment system. Bank facilitate payments through various mechanisms such as checks, electronic transfers, and credit cards, enabling smooth and efficient transactions. Financial regulation. Central banks, as the primary regulators of the banking systems, ensure financial stability by controlling the money supply, managing interest rates, and maintaining oversight of bank activities. Financial innovation. Banks continuously innovate to develop new financial products and services, catering to the evolving needs of individuals and businesses. The impact of money and banking. Money and banking have a profound impact on the economy, economic growth by facilitating transactions, promoting investment, and enabling saving. Money and banking contribute to economic growth. Price stability. Central banks manage the money supply to maintain price stability, preventing inflation and deflation, which can disrupt economic activity. Financial inclusion, expanding access to financial services through innovative products and outreach programs, promotes financial inclusion, empowering individuals and businesses. Financial stability, sound banking regulations, and responsible lending practices contribute to financial stability, reducing the risk of financial crisis that can have severe economic consequences. Economic resilience, a robust financial system enhance economic resilience, enabling the economy to adapt to shocks and recover from downturns. Thanks for listening. Thank you for choosing Roshni with Hina channel. Kindly share, like, and subscribe.